Good morning, everyone. It's around 10 o'clock and we're going to get started. Thank you for joining us today. My name is Ashley Brown. I'm the Senior Marketing Manager at KLR, and on behalf of the firm and our sister companies, I wanted to welcome everyone to our fifth or sixth webinar at this point on PPP. More specifically, the highlights of the new $900 billion stimulus package, PPP funding round 2, and what this means for you and your business. So please join me in welcoming Anthony and Mike Garcia, our presenters and KLR PPP gurus. They have been closely following the new stimulus package, specifically the second round of PPP funding, and have been fielding questions that they will address for you today. We know that there are many businesses who have received PPP funds and are now wondering if they can apply for a second round or skip round 1 and want to apply for round 2. And Mike and Anthony will be addressing highlights of the new stimulus package, tax considerations for 2020 and 2021, and providing an update on PPP round 1 forgiveness and PPP2 qualifications and eligibility for second-time applicants today. So just a reminder, as always, a link to a recording of today's session will be sent out via email after the presentation. And I'm going to turn it over to Mike and Anthony.
Thank you, Ashley, and thanks for all that you do in assisting us to get these webinars off the ground. By my count, this is the 6th webinar that I've been on since the COVID pandemic became a reality. And I want to remind everybody that all of our past webinars are cataloged on our website at conlitwin.com. As Ashley said, along with voluminous other information, blogs, and other resources that will help you to continue to navigate these uncertain times. Before we go further, I would like to say on behalf of KLR, please allow me to thank all of our clients for being clients and putting their trust in us, our referral sources for their confidence in referring valued connections our way, and our friends and family for supporting us and reminding us that there's still the ability to find some joy in the middle of a pandemic. I just want to let everybody know as a general item, I can share that we at KLR are continuing to grow and follow our trend of hiring and developing amazing advisors. I think we've hired approximately 10% of our workforce this year, and we're always looking for new clients and new opportunities to allow us to continue that trend of growth, so please consider us when possible. I'd like to thank everybody in advance for their time and attention, and I'll let you know to keep the questions coming. Mike and I have received probably thousands of questions at this point now over the last what seems like year plus, and remind everybody we're all in the same storm, and just continue to make good business decisions. You can check the tapes on YouTube. I know as far back as our first seminar last April 2nd, we reminded everybody to make good business decisions, and I think that trend continues, and we're seeing some light hopefully at the end of this tunnel, and we can continue on with good business decisions and get to the other side. So I know every time Mike and I see this slide, we wonder why we couldn't have been born ultra wealthy instead of super intelligent and good looking, but I guess we wouldn't be able to put on these sessions if that was the case. So let's go over our agenda. Today we're going to cover the highlights of the new Appropriations Act that was recently passed into law. We'll go over some of the tax items you need to be aware of. We'll go over PPP 1 and 2, some of the updates to the first program as well as the new program. And then Mike's going to cover some changes in the employee retention credit as well as items to be aware of with the Eidl loans. And once again, we will try to get through everybody's questions. We did receive quite a few of them. So let's jump into the Consolidated Appropriations Act of 2021. This is a massive piece of legislation. It may be one of the largest, if not the largest, law passed in terms of pure pages. It was 5,600 pages, of which, bring to your attention, only 645 pages of that law relate to COVID relief. And to put that in perspective, the CARES Act, which was really the first take at addressing stimulus for the COVID-19, was only 880 pages. As many of you are aware, this act provides over $900 billion of new economic relief in response to the ongoing pandemic. But one thing to note is that this bill was combined, this 900 billion bill for stimulus was combined with the 1.4 trillion spending bill to keep the government from shutting down. And you may recall the president was televised going through the act and listing off some of the items that the dollars were being allocated to. And there was some concern over getting some dollars to the taxpayers of the US. Was it $600? Was it $2,000? Ultimately, the act was signed into law on December 27th, and we didn't see those $2,000 payments, but those may be coming. So we're going to go through the highlights of the law, and as they will assist most of our population. I think we can all agree that there's no more important item addressed in this law than decriminalizing the unauthorized use of Smokey the Bear. But after that, there are some other items to go over, including some relief for individuals. So we have a new round of the stimulus payments that you're aware of, $600 for each taxpayer, $1,200 for married joint couples. In addition, $600 for each qualifying child. Payments will begin phasing out at $75,000 of modified adjusted gross income for individuals, double that for married joint couples. And it's important to note that the deadline to receive those payments in your bank account is January 15th. If you haven't received the stimulus payment by January 15th, the mechanism to go about and receive it will be on your 2020 tax return. So it is important when notifying your tax advisor of your tax situation for 2020 and providing your data to note whether or not you received this stimulus payment as well as the first stimulus payment. In addition, unemployment benefits were allocated at $300 additionally per week through March 14th of 2021. So that's really the highlights for individuals within the Act. Moving on to businesses, which is really where we're going to cover a lot of ground today. We have PPP2, which is probably the biggest item addressed in the Act for many of you. Additionally, we will bring your attention to the employee retention credit because there's some modifications that can be pretty significant to helping businesses that have been impacted by shutdown orders of the local government organizations. Additionally, many people may be aware that if you had an SBA loan, you received payments on that loan by the government in 2020. This law has an extension in it whereby those SBA loan payments may be made on your behalf for up to an additional 8 months. I do caution people that those are to begin in February 2021. So in some cases, you may have to make your January payment. So you may want to speak with your bank to make sure whether or not you need to make your January payment or not on the SBA loans that you have. Additionally, it's important to note that the payments made on your behalf on those SBA loans will not be taxable income to you in 2020. There is some question on whether or not the interest that's paid on your behalf is deductible. I would err on the side of being conservative and saying no. Mike would probably lean on the other side and say to take the deduction, but to be determined. Another item we'd bring to your attention, but we're not going to really cover much today, is there's a shuttered venue operators grant provision in the law. What this is it's grant money available to certain businesses that operate in the arena where you sell tickets for venues. So anything that is concert related or the arts related. We have a few of you on the call here today. There is a provision in the Act for that to be aware of to get some grant money. Economic injury disaster loans, also known as EIDL, some additional funding targeting specific low-income communities for that. The extension of the paid sick and family leave provided under the Families First Coronavirus Response Act, or FFCRA, that's been extended through March 31st, 2021. And if you're not familiar with that, that's whereby employees of certain businesses get up to 80 hours of paid sick leave for any employee who is experiencing COVID-19 or who has been forced to quarantine. The mechanism to claim that credit, we get this question a lot. That's done through your payroll. You need to be sure to be coding the payroll correctly in your payroll system, and then when the credit is obtained, it comes against your future 941 withholding remittances. And another highlight of the act, just to mention, is that the reasonable cost for business meals provided by a restaurant are now 100% deductible for 2021 and 2022. So we ask everybody to support your local restaurants. We know we have a lot of you on the webinar today, and as I said earlier, we're all in the same storm, but please bear in mind that just because we're in the same storm, some of us are able to work from home. We're in bigger boats. Some of these restaurants have been operating at 25, 33% capacity, and they've really been impacted greatly. So this is a provision in the Act trying to get the general population to support restaurants. But as I said, we're really going to highlight today on the Paycheck Protection Program provisions in the Act, so how they relate to PP1, PPP2, and just some tax considerations to consider. So we know that we're going to address deductibility of PPP related expenses. We're going to talk about loan forgiveness process, what's changed, including the treatment of the EIDL advances. You may remember those from round one, $10,000 up to $10,000 per business. And then we'll cover how to go about and obtain PPP round 2 money. So I want to talk about some tax considerations, and this is kind of going to overlap some of our government policy right now. So as we now know, we're on the other side of all of our recent elections, and I believe the final results are that the House of Representatives is 222 Democrats, 211 Republicans. So that's razor thin when you look at that, but the Democrats have control there. The Senate is a 50-50 split because there's 48 Democratic senators and 2 independents that caucus with them. So Senate's really split, which means the VP has the break, and the VP, she is of the Democratic Party as well as the president. So what we're looking at is we're looking at some noted changes potentially in the tax law. As you remember, a few years ago, the current administration passed the TCJA, and that really pushed for lower taxes. So what we're seeing potentially, just to make you aware, and we covered this in our last webinar in November, and it's available on our website, is that we'll see the C Corp tax rate potentially go from 21% to 28% is what there's talk of. We're hearing talk of the top tax rate at the individual level going from 37% back to 39.6%. Some items with the estate tax exemption will be reduced, going from approximately north of 11 million back down to $3.5–5 million range, as well as the potential elimination of the step up in basis. Realistically, we keep hearing that those making over $400,000, that's really the crowd where taxes are supposed to go up. So some of the things we're seeing is the qualified business income deduction, the QBI deduction for pass-throughs, whereby 20% of that income is not subject to federal income taxes. We're seeing where the income over $400,000, that deduction will potentially go away. We've heard rumblings that capital gains taxes for those making over $1 million, capital gains tax will revert to ordinary income taxes, which means that top tax rate for cap gains could go 23.8 up to 39.6. And then, one of the other ones that we're seeing is we call this donut hole, where Social Security taxes stop at approximately $140,000, $150,000 for individuals. We're seeing whereby they'll stop still at that range, but then once you hit $400,000 on a W-2, they'll start back up again. So, I mean, doing the math, 6.2% on Social Security taxes, the 37 going up to 39.6. You're looking at approximately a 9% tax increase on those over 400,000. And why that matters is going back to making good business decisions. We don't know if that's going to all impact in 2021, but you got to kind of structure your 2020 tax year to see when you want to recognize income, if legally possible, and balance that with 2021. And one of the biggest things to come out of this act as it relates to taxes is that we've been saying it was going to take literally an act of Congress to make the expenses paid with PPP funds deductible, and we got that act of Congress passed as part of this bill. So now we can say with certainty that not only is the loan you received from the government, the PPP loan, the forgiveness of debt, not subject to cancellation of, debt income, is not taxable, but the expenses, meaning the actual expenses you paid with those PPP loan proceeds, are now able to be deducted. And that's going to help with tax planning. It's going to allow businesses to take some dollars that they may not have had because they would have had to pay income taxes, and hopefully get through the next several months till we can get on the other side of some return to normalcy. One thing we want to mention, because a large percentage of the businesses that are in the world of ours are pass-throughs. And the thing to remember is that there may be a tax issue here whereby if you don't have this dreaded term called basis, you may be in a position where the benefits of the PPP expenses that you paid are not necessarily going to help you in 2020. It might be a 2021 item. And we'll walk through this quickly, understanding that not everybody strives to be a tax accountant, and that's why we're here. But we're going to give you an example of how this works. So, think of it this way. You've got a company whereby at the beginning of the year, the owner, she has basis of $10,000 in her S corporation stock. And in 2020, the business that she owns incurs a loss of $50,000. And in order to fund this loss, PPP funds were used. So I'm sorry, the loss is $25,000, but they received $50,000 in PPP funds. So on your profit and loss statement, you show a loss of $25,000. You had a PPP loan of $150,000. And I'm really messing this up now because I'm trying to read off slides that are backwards. So let's go back to the beginning. You have a loss in 2020 of $50,000. You have a PPP loan of $150,000. You funded that $50,000 loss in 2020 using your PPP loan. Subsequently, in 2021, you have another loss on your business on your profit and loss statement of 2021. So let's see what that does for tax purposes, remembering that realized versus recognized is a concept to think about here. So realized is cash in your pocket, actual cash you have, what's really going on in the business operations. Recognized simply means reporting as such according to the instructions, and the instructions here we're following are the tax code. So as of January 1st, 2020, you have basis of $10,000. Keeping in mind that you had a loss in 2020 of $50,000, you're only allowed to take a loss of $10,000 if you did not receive your SBA forgiveness letter in 2020. So we've got a lot of clients that have applied for forgiveness, but they haven't gotten that SBA letter yet, which if you haven't gotten the SBA letter, it means that the cancellation of debt income happens in 2021. So if that's the scenario you're in, which is the majority of people, and if you don't have basis, you can see here that your loss in 2020 is limited to your basis, and the additional losses carry forward to 2021. So let's look at it a little bit more clearly here, where if you did receive your SBA forgiveness letter in 2020 saying that your loan was completely forgiven, you now have the ability to get basis as a result of receiving that letter. So if you had a $50,000 loss in 2020 and you received your SBA forgiveness letter in 2020, your basis goes up by that forgiveness of $150,000, which means you can take the full loss of $50,000 in 2020 as opposed to carrying it forward to 2021. So you're saying, why does this all matter? Why are you going through this? Well, why it matters is that most companies, specifically S Corps, the owners have W-2s from those businesses. And when you have a loss incurred in the business, in certain cases where you have basis, you can use that loss to offset your W-2. So we just bring that to your attention because this is going to be a hang-up for a lot of S Corps partnerships, all pass-throughs, to really track that basis. And we're basically telling you to speak with your tax advisor to see where you are at the end of 2020 if you haven't received your SBA forgiveness letter. That's really the homework here. So let's jump on to actual loan forgiveness changes. So this is where we want to really zero in. What's going on in the Act? So 87% of the loans that were issued under PPP1 were loans that were under $150,000. So let's put that in perspective. 87% of, $525 billion were loans under $150,000. The SBA doesn't have the manpower to really examine all these loan forgiveness applications. So we've been saying this for a while. We've heard that the forgiveness for these loans was going to be simplified, and this Act memorializes that. So what we've heard is that it's going to be like a one-page form whereby these loan recipients get to sign off that they did not use the proceeds in any wrong manner, and basically can skip the FTE or the salary reduction test on the form. And unless the SBA reviews your loan forgiveness, you don't have to go through that process. So we see this as a welcome positive change and make things a lot simpler for small businesses. Kind of a surprise that, we've been hearing this 150,000 for a while, but kind of a surprise that none of us that I'm aware of saw coming was, if you remember early on, you could apply for an economic injury disaster loan advance, and you were able to receive $1,000 per employee, capped at 10 employees, or $10,000 as part of the Eidl program. However, if you also received a PPP loan, your PPP forgiveness was reduced by this amount. Well, unexpectedly in the law, the government has reversed course and said that that's not on a go-forward basis going to happen. You're now able to get full PPP forgiveness, and the Eidl advance is not considered under the PPP forgiveness model. So we've got a lot of people sitting there saying, okay, well, I've already applied for my PPP forgiveness and I got full forgiveness except for the $10,000 grant, and I've got a loan with the bank for $10,000 that I've been paying. We can note that the SBA is supposed to contact your lender. You don't have to do anything, and they're going to pay off that loan for you, and you should be hearing from your bank, and there's the potential to get some interest back on some of the payments you made.
Just want to add into on the loan forgiveness application for $150,000. The SBA has until January 20th to release that form. So I know I've been getting questions, hey, when's that form coming out? They have until the 20th. So hopefully, end of this week, early next week, but they do have until the 20th to get that. And then just also keep in mind, once the form is released, the banks then have to adapt their systems for that $150,000 loan application form. So there may be even a further delay before you can actually use the simplified $150,000 forgiveness form.
And perfect timing, Mike, with dates. So let's jump into PPP2. So breaking news is that PPP2 will open up for all borrowers next Tuesday, January 19th. So a very timely seminar. You may have heard that it opened up this week for local community banks, as well as some underserved communities, but it's going to go live for all borrowers January 19th. And keep in mind, PPP2 is 284 billion in funding. Putting that in perspective, PPP1 was 525 billion. But we don't see that there's going to be the same rush on PPP2 as there was PPP1 because there is some restrictions in order to apply, including to be a second-time applicant, you must be a small business with 300 or fewer employees. In PPP1, that number was 500, so now we're down to 300. The special rules for multi-location restaurant hospitality businesses still exist, so it's 300 per location. In order to apply, you must have spent or will spend the full amount of your original PPP loan by the disbursement date of your PPP2 loan. One of the items that is new here that we think will basically be the trigger point for who can and can't apply is that you must be able to demonstrate a 25% revenue loss in any quarter of 2020 versus the same quarter in 2019. Additionally, a new rule has come out that has also said if you take your 2020 gross receipts and compare them to your 2019, if you have an overall 25% reduction when looking at the annual receipts, you're also eligible to apply. The question comes up, what documents do I need to produce to obtain this loan to verify my 25% revenue loss? And there's no guidance as of today. What we can say is that for loans over $150,000, you can potentially provide your interim financial reporting, or if your tax return is done for 2020 versus 2019, if you're going on the annual method, you could use that. There is a caveat whereby if you're applying for a loan under $150,000, you do not have to provide verification of the gross receipts reduction until you apply for forgiveness. But if you're over $150,000, you do have to provide some sort of validation, but there's no guidance on that yet. So we believe it's probably going to be some interim financial reporting for those businesses. Some other items, it expands who can borrow PPP2, so certain small 501c6 organizations that were precluded from PPP1, so chambers of commerce's, economic development organizations. The loans are based on 2.5 months of average eligible monthly payroll costs, similar to PPP1, so no change there. One change is now that the loans are now subject to a maximum cap of $2 million, whereby in PPP1 they were $10 million. The affiliated group rules still apply, and they're capped at $4 million. One item of note is that hotels and restaurants, so those with NAICS codes starting with 7.2, instead of multiplying by 2.5 months of payroll, you get to multiply by 3.5 months of your average monthly payroll to get a little bit bigger loan, but please keep in mind that it's still capped at $2 million. Allowable uses. So all the same allowable uses from PPP1. Once you get your loan, you can use it to pay for payroll costs, mortgage interest, rent and utility payments, as well as now certain operating expenses as they relate to software to track all your inventory, cloud accounting items, any software items in operating expenses are now part of the PPP2 allowable costs. But the home run here we see is what's called supplier cost, covered supplier cost. You may be able to pay your actual supplier expenses with PPP2 funds and use it to obtain forgiveness. Additionally, PPE expenses, as well as any facility modifications, maybe you built out a drive-through, those are now eligible to use PPP2 funds to get forgiveness. And additionally, property damage costs, there was some rioting this year, and so they felt that those businesses that needed to repair their businesses, they could use PPP2 funds to do that. One change that's come out since the original PPP one is now your covered period can be any period of time between 8 weeks and 24 weeks. So you're now able to use any period of time. I do caution you that, the salary is prorated, your expenses are prorated. So, if you remember, you could use salaries up to $100,000, whereas if you use 24 weeks, that's about $46,154 in eligible salary. 8 weeks was $15,385. So let's say you go with like an 18-week period, you'd have to prorate that $100,000 salary, and if math serves me right, it's $34,615 or so. Additionally, that 60% minimum spend on payroll cost is still required. So in order to get forgiveness, you need to use the proceeds from your PPP loan, 60% of it on payroll costs. Little caveat here, and this is something we're going to cover in the next part of the webinar. I know Mike's going to go over it, in that, you can now use these expenses, these 4 new expense options. You can now use them as part of your PPP1 loan forgiveness application. And we've had a lot of people that have said, well, I'm doing my PPP1 loan forgiveness application, and it's just simple to use payroll over a 24-week period of time, and I got full forgiveness. Why would I want to do this? Yeah, that's a lot simpler, but you potentially are leaving some tax credit dollars on the table, and that's another big change that came out of this act that is flown under the radar, probably up until now when Mike speaks. So just as a reminder, how do you apply for your PPP loan? How do you determine it? Eligible compensation, you can use 2019 or 2020 as your year. So you'd probably want to go with the higher of the two. We've always recommended to pull your W-2s and W-3s. So start with your W-3s. Go through your W-2s. Any person who made over $100,000, you take them out of that number. You come to a total, and then you count up the number of people that had salaries or wages in excess of $100,000, and you add them back at a $100,000 cap. So that's probably the simplest way we've always said to do it. Some additional payroll expenses include 401k matching contributions, profit sharing contributions, as well as state and local income taxes and employer paid health care expenses, health insurance expenses. So you're going to get that big bucket of eligible expenses. Divide it by 12, multiply it by 2.5. That's your loan amount. If you're in the restaurant or NAICS code 72 industry, multiply it by 3.5. Remember that your loan is capped at $2 million. So some real quick FAQs. In my gross receipts, does my PPP1 loan or EIDL loan, does that count as gross receipts? The answer is no. Does the PPP loan forgiveness count as gross receipts? No. Related party revenue is not to be included in this calculation. It's specifically called out as not being a part of your gross receipts test. So remove all your related party activity. How do I support that 25% decline in gross receipts? Still waiting on guidance on that. As I said, tax returns, interim financial statements. And how do I calculate gross receipts, accrual versus cash? We'd say whatever is easily identifiable, remembering that you're going to have to provide some information at some point to support this. We think a lot of the smaller companies would probably use whatever they use on their tax return, because you'll probably want to use your tax return to support this, or you keep your books anyway on the cash basis for tax purposes. Larger companies would probably move more towards accrual because they have formal financial reporting that they probably do on a quarterly basis. Loans are still, if they convert to loans, still at that 1% interest rate, and still a 5-year term. So the last thing I really want to hit on before I turn this over to Mike is economic necessity. We've had several people say, hey, we've already received calls, PPP2 has been announced. My second quarter of 2020, it tanked. My gross receipts went down, 40%. I can validate that. This is great. I got a PPP one loan the first time of $500,000. Should I apply again? And we say this very strongly. You are still certifying that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So you are still making this certification. And if your business rebounded in quarter 3, quarter 4, and you're sitting on a pile of cash and a backlog of business, and maybe quarter 2 was just a blip, we just encourage everybody to be very careful, because you may remember that PPP 1, the loans over $2 million were subject to SBA review. Bear in mind, PPP 2, each loan has a cap of $2 million. So we don't know if correspondingly the SBA is going to come out and say, well, we're going to look at all loans over $500,000 as part of PPP 2, or loans over $1 million. We also don't know if they're going to aggregate PPP 1 and PPP 2 when they review loans. So we caution everybody, look at this economic necessity and really make a smart decision, because we just don't know what the SBA and the government's going to do down the line. We don't have a crystal ball. Last thing I'll leave you with is PPP loan due diligence file. We wrote this blog back in April. We stressed it back in April. Can't stress it enough. PPP 1, do a due diligence file. Do the same with PPP 2, because the SBA has up to 6 years to look at these documents. And I can't remember last April 2nd. I'm not going to remember 5-6 years from now where we were, hopefully back then. Hopefully the world will be a much better place. So with that, I want to thank you and turn this over to Mike to really get into the employee retention credit and some other items that you may not have been aware of. So Mike.
Thank you, Anthony. Good morning, everyone. If anyone watching today's webinar saw my article in the Providence Business News earlier this week, you may recall that I had specifically mentioned that the extension and modification of the employer retention credit was one of the biggest pieces out of the recent legislation outside of the PPP, PPP changes to the PPP program. It's funny, when the CARES Act originally came out, we did 3 slides on the ERC. It was essentially a throwaway part of the presentation. We wanted to make sure that clients were aware of the program and they kind of knew the basics of it, but it really wasn't that important, because I remember, Anthony and I were going over the CARES Act when it was originally written, and we said, well, if you have a PPP loan, you can't qualify for the employee retention credit. So why would you bother? The PPP loan, in many cases, was always going to be the better scenario than taking the employee retention credit. So, some of you may be saying the employee retention credit, I don't remember that. We only did 3 slides on it. There wasn't much activity on it. I only, out of the, thousands of calls and emails that we got on PPP CARES Act, I only had 1 client seriously discuss with me the possibility of taking advantage of the employee retention credit. And that was only because they couldn't qualify for a PPP loan. So out of every, so now this has become more important. Why? Because in a surprise move as part of the legislation, Congress has decided that not only are PPP borrowers eligible to take advantage of the employee retention credit, we're going to make the change retroactive. Nobody saw this coming. There really wasn't any talk or discussion or rumor about it. So it's a really big surprise that came as part of this legislation. So now it's really important for business owners to get a little bit of education on the employee retention credit and how it may affect their business. To our nonprofit friends listening today, this does apply to you too. Nonprofits are eligible to apply for an employee retention credit if they qualify. So we are going to talk a little bit specific about nonprofit at certain points when we talk through this, but this is something that you do want to be aware of, because it may be able to generate some cash flow for you. So let's jump into the employee retention credit. As we just discussed, the credit was introduced in the CARES Act. But again, because you couldn't have both the PPP and the ERC at the same time, it wasn't talked much about in the news. To be honest, I'd love to know exactly how many businesses took advantage of the program in 2020. I remember when Anthony and I were first going over the CARES Act that we both said, what's the point of the program anyway? 99% of the businesses who need it and qualify for it will probably get a PPP instead. The ERC was designed to provide a credit of up to $5,000 per employee on the first 10,000 of eligible wages paid to the employee during the year. Now this is key. During a shutdown period, the wages have to occur during a shutdown period. The shutdown period is key, as we were talking about this credit. In order to qualify for the credit, your business must have been affected by a qualified full or partial shutdown order. We're going to talk more in a little bit about what a qualified or full or partial shutdown order is. But first, let's dig into what changed in the ERC. We're going to break the changes up into two sections, 2020 and 2021. In section 1, we'll review the ERC program through 12/31, and in section 2, we will discuss what's new for 2021. So eligibility. Generally speaking, the ERC is available to businesses whose operations were fully or partially suspended by a government shutdown order, or whose gross revenues declined more than 50% when compared to the same quarter in the prior year. The fine print on that. Employers with more than 100 average employees, and this is on an FTE basis using 30 hours. I know we keep jumping around whenever we talk about CARES Act, what's an FTE? Is it 30 hours, 40 hours? It's a 30-hour average FTEs for 2019. Only wages paid to employees who are not provided services due to a shutdown order are eligible. So if you're a large employer, this basically comes down to a large versus small employer. If you're a large employer, you essentially have to be paying your employees to sit at home and not work. They can't be providing services to you, services in response to the wages that you're paying them. For employers with less than 100 average FTEs, all wages paid to employees count. So even if those employees are working, you actually still get a credit for the wages that you pay to them. What wages are what wages are eligible? Only wages paid during the shutdown period or where sales on a tax basis decline more than 50% versus the same quarter in the prior year. Additionally, healthcare costs paid on behalf of the employees are eligible to be included as wages for this credit purposes. Wages paid in accordance with the Families First Coronavirus Relief Act are ineligible. And for those of you thinking out there that, hey, I had some severance payments to some employees, or some vacation that I had to pay to some employees once I laid them off, that's not, those wages are ineligible. They have to be an active employee. So you're gonna have to, if the credit is ever looked at by the IRS, you're gonna have to support that with the IRS. Important. So this is going to be a bigger discussion later on, but wages paid for with PPP funds are not eligible. Obviously, you can't generate a credit with wages that were paid for with somebody else. So it is specific in the legislation that wages paid for with PPP funds are not eligible. Also, in a real funny rule that's in there, so you can have a 51% owner of the company, and the wages paid to that individual are eligible for the credit. However, wages paid to the relatives of that owner are not eligible. It's a really weird rule that's in there that we're just kind of throwing out there so people are aware of and they kind of know what's going on. And without getting into all the tax law, it's how they wrote the legislation. We're hopeful that the IRS might change that because I don't think that was originally their intention. I think they were just grabbing a piece of the tax code and accidentally tagged in this little provision in here related to the related party wages. So how do you receive the credit? The credit will be the credit you apply for the credit as part of your quarterly tax filings, and on your quarterly tax filings you'll get a credit against your Social Security taxes that you owe to the government, the employer share of the Social Security taxes. If the credit is greater than your taxes due, it's actually refundable. The government will actually send you a check back for the difference between the credit and what you owed in taxes. So there's some important notes. This can't be a voluntary shutdown. So basically, this needs to be sorted by a government order. Just the government asking you to social distance, spread out your workforce, maybe not have them all in the same, some guidelines, but nothing that's actually enforced by an order. Stuff like that cannot actually be, use as a qualified government shutdown order. Really think reductions, your reductions in capacity or complete closure orders. But, basically where they're saying, well, you can't open, easy example being the restaurants. You can only have, if you can only have 20% of your dining capacity, then you're subject to a partial shutdown order. And, so think those type of things. And important to note, because some of you are thinking, well, we were shut down, but then we had everybody working remotely. Teleworking, basically, if your employees were still substantially doing their jobs, during the closure from home, you don't qualify. And then I know some of you are saying, well, what do you mean by substantially? We don't have a great definition of substantially, but I'm just going to say that if it doesn't pass the sniff test, don't think you can take it. It's got to pass the sniff test. For our nonprofit friends, how do you determine gross receipts? This is we're going to oversimplify it just for the purposes of this presentation, but generally speaking, a decrease in gross receipts is determined by looking at all the income sources of the nonprofit. Investment income, service income, sales income, gifts from outside donors, all that is considered when looking at to determining gross receipts. So, like I said, nonprofits shouldn't sleep on this provision because it may be applicable to them. It might be able to generate some much needed cash flow. So a lot of you are saying, okay, well, wait a minute, I'm a PPP power and I didn't claim the credit during 2020. Can I retroactively claim it? Yes. The problem is we don't know exactly how that's going to work yet, because in theory, you can go back and file amended Q3 and Q4 returns. But to be honest with you, the IRS does not want that, a ton of amended returns for payroll taxes coming back in the third and fourth quarter. What we're guessing is that within the next couple of weeks, we're going to get guidance on how to claim this retroactively. It will be an amended return, but I wouldn't even be surprised if they include it as a special form, an outside special form where it's not even an amended return and somebody recalculates, hey, this is what I want to claim as a credit. So how does this affect my PPP loan? So this is the big question. So for those PPP1 borrowers who have not applied for forgiveness yet, and you may qualify, wait to apply for forgiveness. Basically stop the process right now. And the reason being is because one of the big questions is going to be how do you maximize the credit? And we need to kind of take a global look at your entire operation at this point. So you got the PPP1 funds at the beginning. And you use them in different ways. Now, when you're applying for forgiveness, a lot of companies are saying, well, I'm just going to use payroll costs because it's easier. I don't want to worry about all those extra stuff. I just want the full forgiveness. But now you're not only talking about getting full forgiveness, you're trying to consider, all right, how do I maximize getting, if I qualify, an employee retention credit? How do I maximize that credit for 2020? So in theory, you want to use as few payroll dollars for forgiveness purposes as possible when applying for forgiveness so that you can maximize your eligible wages for the employee retention credit. So this is a huge thing if you haven't already applied for forgiveness. Unfortunately, if you have applied for forgiveness, we're kind of stuck until we get some more rules from the IRS. On basically how this is going to apply for anybody who has applied for forgiveness. But even for those who haven't applied for forgiveness, again, we don't know how the IRS is going to say, well, this is how we're preventing people from double dipping and not using the same wages that funded, that same wages that were funded by PPP versus those you want to take a credit on. Because remember, there's a timing issue that's going on here. You have to be subject to the qualified shutdown order affecting your business. So it's just something to keep in mind. Like I said, you want to know the basics of this, and we got to start looking at it, because if you do qualify, how you apply for PPP1 loan forgiveness is greatly affected. Just a note on the tax effect, just so you know, whatever amount of credit you get for wages under this program, you do not get to deduct on your tax return. So you'll get, basically the government's just passing through, giving you the the money to pay your employees, but you don't get a deduction. It's not like PPP where you got the deduction. For employer retention credit, you do not get the deduction. So changes for ERC, to Section 2 so ERC changes effective on 1/1/21. So it increases the rate from 50% of wages to 70% of wages. It increases the limit of wages from $10,000 per employee 10,000 per year per employee to 10,000 per quarter per employee. So it effectively raises the credit from up to 5,000 per employee, because remember, on total basis, 50%, it would be 5,000 for 2020 to in 2021, it now increases it to $14,000 per employee. So especially for 2021, any affected businesses should really be looking at this, because not only can you claim this on your quarterly tax return, there is a mechanism that we still unfortunately don't know how to do, but there is a mechanism to get an advance on this credit that you can actually file and get cash now versus waiting for the credit when you actually file your quarterly tax return. It also reduced the quarterly gross receipts test from 50% to 20%. And once again, there's some caveats to this rule. We're not going to go into them today. I just want to make sure that on a high level that everyone kind of understand what's going on with the employee retention credit. Also increases the average employee cutoff from 100 to 500 when determining eligible wages. So now a lot of those large employers are now considered small employers. So the rules change differently. And like I said, if you're a eligible small employer, you can claim an advance on the credit at any point during the applicable quarter. So if you really need business, and if you really need the cash and you're a small business, this is a great way to get some cash in now on top of possibly getting a PPP2 loan. So that wraps up kind of like the employee retention credit. I know we went kind through it kind of fast. One of the things I would tell you is reach out to your KLR advisor on this. Whoever you have a relationship with on the firm. The firm is getting up to speed on this, and we're staying on top of all the new information that comes out from the IRS on how to claim this credit, especially where it relates to retroactive on 2020. Like I said, for a business that may qualify, this could be a huge thing, because it can create some cash flow now for you. As we get to wrapping it up, I wanted to touch upon Eidl loans. If you recall in the earlier webinars, we weren't the biggest fans of Eidl loans. We weren't promoting them as much as the PPP, because there was a lot of unknowns about the program. We didn't know what the actual terms of the loans were going to be, the amounts, what kind of restrictions would the loans have. So in many cases, we told you, apply for the Eidl loans because you wanted to get the Eidl advance, which was that $10,000 grant of money. But before you sign the paperwork, let's compare that to what your loan terms would be with your bank, borrowing on the line of credit, etc. So one of the things I want to point out on the Eidl loans is some of the restrictions that were in the loan agreements, and just remind you of them. Some of the restrictions when you signed the paperwork for the EIDLs that came along with the Eidl money. So these are these loans that you probably have sitting on your books right now from anywhere from 100 to 150,000. I didn't really hear of anybody getting more than 150,000. That was kind of an artificial cap on these Eidl loans because there were so many applications for them. So fine print number 1, financial statements. The loan agreement requires that you provide financial statements within 3 months of your fiscal year end. No word on how that's going to be submitted, if there's going to be an online portal for all these, but just know that they're going to request financial statements. Furthermore, if they want to, they can, at their discretion, ask for you to provide review level financial statements from your CPA firm. Which is going to be an additional cost and expense, obviously, if you have to go to a review level financial statement service if you already don't get reviewed financial statements. So just be aware that 1, you have to provide financial information within 3 months as part of the loan agreement, and 2, they could possibly come back and ask you for review level financial statements. Fine print number 2, this is a big one, limitation on distribution of assets. All these are coming directly from loan agreements from some of my clients that we have reviewed. Borrower will not, without the prior written consent of the SBA, make any distribution of borrower's assets or give any preferential treatment, make any advance directly or indirectly by way of loan, gift, bonus, or otherwise to any owner or partner or any of its employees or to any company directly or indirectly controlled or affiliated with or by the borrower or any other company. So in theory, they're telling you you can't give out bonuses to yourself. If you're the owner, you can't give out a bonus to yourself without their written consent. technically speaking, you could be in violation of this agreement by not getting SBA consent prior to taking a bonus. Please be aware of this. What enforcement and oversight will come of this, we don't know, but we want to make sure you kind of are aware of this as you're looking at year-end planning if you did take an EIDL loan. And the last one I want to point out in the fine print was number 3, is the collateral. So per the loan agreement, you can't sell or transfer any collateral without SBA approval, other than your normal inventory. So if you go to sell the business, if you go to sell a major piece of equipment, technically speaking, you need SBA approval. So there's a lot of, as you can see, we're getting a lot of strings for $150,000 of borrowing. Also, borrowers will neither seek nor accept future advances under any superior liens on the collateral securing this loan without the prior written consent of the SBA. So the question being here is, and this is something that is a gray area right now, is so I have a line of credit. Is me taking an advance on my line of credit, taking an advance on a superior lien? In most cases, it probably is. So in theory, you're borrowing on your line of credit is even creating a default under this agreement. So there's a lot of fine print here. I talked to your banker, I talked to us, I probably talked to your attorney and kind of figure out, do I have some risk here with this EIDL loan that I have sitting on, that I have on my books? If you needed the money and that was the only way you could get lending, obviously you needed the loan, but you may want to reevaluate from a business perspective having this EIDL loan with the SBA. And then we'll get to your questions answered.
So as we've been doing the webinar, I've been fielding questions, and the biggest one that keeps coming across my email is, I didn't apply for PPP1, am I eligible for PPP2? The thing I would say is yes, $35 billion in the 2021 law has been earmarked for those borrowers that did not participate in PPP loan round 1. So yes, you can apply, and the specific dollars earmarked for you. Jumping ship to other changes to the short form for PPP forgiveness. Yes, they're coming. There's 3 forms. You may never even see the application for forgiveness because the banks have portals and they actually fill out the form. So you may not even know which form you're filling out. There's the 3508S, which was for businesses under 50 with loans under $50,000. We think that form will end up becoming loans under $150,000. That's that 1-pager. The 3508EZ is for those businesses that haven't laid off any employees or had any reductions in staff or salary and wage reductions, so they don't have to do the expanded FTE test or the salary and wage test. And then there's the form 3508, which is the actual all-in forgiveness application form, and those businesses that have to go through the FTE and the wage and salary reduction process will do it there. But we see the new form coming out probably within the next several days to weeks. What happens if you sell your business and forgiveness? I've done 3 or 4 of these I've consulted on in late 2020. In certain cases, you have to notify your lender and you have to put an escrow account with the PPP funds in that account. And until you get forgiveness from the SBA, those escrow funds are not released. Will the simplified $150,000 forgiveness be allowed for PPP1 or PPP and PPP2 separately? Say PPP 3 times fast. Will the simplified $150,000 forgiveness be allowed for PPP1 and PPP2 separately, or will it be a total of $150,000 for both? As of today, it's separate. Mike, you want to take the next 3?
Okay. Then this, we kind of went over the necessity certification of a second PPP loan. Again, this is a huge issue. I think everyone, I don't want anyone to gloss over it and kind of just take a look at that. And it goes back to the due diligence file and making sure that, you've adequately, evaluated your business and said, yes, we need this PPP2 loan in order to, to continue our operations of our company. So you want to have all that backup. Like I said, We don't know what the oversight is going to be. The first loans, it was anything over, the first package, it was anything over 2 million, and loans could be up to 10 million. So now that we're down to 2 million, what's the level? Is it $1 million? Is it 750,000? Is it 500,000? We don't know what the level that they're going to be looking at. So realistically, looking at your operations and saying, listen, I have, if you have no cash, no customers coming in, obviously you have a necessity problem. But if you're sitting on a bunch of cash, you had a good year, sales are strong, you're not declining. We have some history now. Back when everyone first took these PPP loans, the world was ending. We had no idea what was going on, from month to month. All we knew is that all of a sudden the highways were empty and we were all at home. So it's just got to look at that. Is there any further guidance on the safe harbor rule number 1? So once again, if you saw my Providence Business News article earlier this week, this is a big issue for me personally. I really would love to see some more guidance on this area, because it's a big, it's a big leap for a borrower to assert to that and not know the rules that they're going to be, the standard of the rules that they're going to be held to later on. So so there is no more further guidance on it. We wish there were, but unfortunately it's not. Can a startup apply for round 2 when the application for forgiveness is still in review? Yes, if it's still in review, if your application is not complete, your PPP1 loan does not have to be forgiven when you apply for PPP2. It could still be in process for application purposes, or you might not even have applied yet. All that was required is that you have actually spent the money, or will have spent the money by the time you get your PPP2 loan, which in most businesses would, for most businesses would not be an issue.
So your homework, a couple things you can take from today's webinar is, if you're specifically a pass-through S Corp LLC, speak with your tax advisor, because you may have some basis issues if you haven't received your SBA forgiveness letter yet on your PPP, as it relates to deducting the expenses in 2020 and getting that loss. So PPP is not taxable. So the other thing you can do is really look at extending potentially your 2020 tax return and balancing out, because as 2021 goes along, we'll have a clearer picture of the tax structure in 2021 and going forward. So I would tell you, this may be the year you extend your tax return to kind of balance. Should I be recognizing revenue in 2020 or 2021 if it's legally possible to do that? If you have used your PPP Loan 1 proceeds, you can start applying for forgiveness. I will tell you that if your loan is over $2 million, we've spoken with several banks, we have not seen any loans over $2 million receive final approval yet from the SBA. Those loans that have gone through the process and they've even hit the end of the SBA deadline, because it's supposed to take up to 5 months to get forgiveness, we've seen those loans go into what's called a review or pending status. So the SBA has not actually approved forgiveness yet. If you haven't applied for forgiveness yet, reach out to Mike I or whoever your advisor is. Look at that ERC if you were subject to a shutdown order, and you may, instead of wanting to use payroll to get full forgiveness, use some of those other expenses that are allowable now, up to 40% to get your forgiveness, and then look at obtaining the ERC, because it's a nice little credit to come along. If you are a struggling business and hit the eligibility for PPP2, now's the time to start contacting your lender. You can use the same lending institution you used the first time, or even a different one this time around, but PPP2 opens next week, so get ready for it. And if you got any other government funds besides a PPP loan, you may have an audit requirement for a single audit. Have a blog on our website, conluton.com. Read that to see if that's an issue, and just continue to make good business decisions. So please allow me to thank you for your time and attention. As always, with our closing credits, I can't say enough. Lots of thanks to our amazing marketing department at KLR, including June Landry and Ashley Brown, who make these webinars possible for us. I will talk very highly of our IT team. We've been working from home since March 15th of last year. Our support staff, our amazing support staff that's still in the office helping us out, make sure the firm keeps going. And our HR department that has actually jumped in and worked with a lot of our clients who may not have an HR department, or have an HR department and want to bounce things off of another HR group, because this is truly unprecedented. We are here for you. We are humbled be able to provide you service. And, you know, I will just say that preparing for PPP2 was much, you know, like, I guess what goes through the process of being in a rock band. I mean, we had our first big hit last year. We spent all year on tour, and we got back together, and we just, we've released our second album. It's more of the same from the first one. Why break up a winning combination? And hopefully we'll continue to be on tour this year, and you'll join us, and it'll be Mike and I, and we'll continue to add people to the band. So we wish you all a happy, safe, and prosperous 2021, and look forward to continuing to see you. And Ashley, please take it away.
Thank you, Anthony, and thank you, Mike. That was excellent and a ton of information. So I wanted to remind everyone that in addition to these webinars, Anthony and Mike have written extensively on this topic, and all of their blogs are located on our website. We've actually created a PPP headquarters, which is linked here on this slide, and it's on the homepage of our website as well. So it makes it easy to find all of our PPP information in one place. So stay tuned for some additional blogs, and they'll be located there. We also updated our year-end tax planning guides for both businesses and individuals to reflect the new stimulus package and those changes, which can be found and downloaded under the white paper section of our website. There'll also be a link in the follow-up email to these. KLR Wealth Management will be hosting a webinar on January 21st titled 2021, A Look Ahead. It's going to be a market update and some future tax planning guidance for high net worth individuals. There's a link here, and again, we'll put a link in the follow-up email that you'll be receiving. That email will also include a link to a copy of the PowerPoint and a recording of today's webinar, and it will be going out this afternoon. So as always, please feel free to reach out to us if you have any questions. We're here to help. Thanks again for joining us today, and have a great day. Bye, Anthony. Bye, Mike. Thanks.
Thank you.